So, North Melbourne, Heath, we're having a segment here on Suburb Tracker to find out where it is in the cycle. North Melbourne, why don't you tell the viewers what North Melbourne is like? Obviously, someone might be watching this from Cairns, for instance. So, what is North Melbourne like?
North Melbourne, it's on the fringe, northern fringe of the Melbourne CBD, gentrifying suburb, a real mix of uses, commercial, industrial, residential, quite a bit of unit development going on.
Yep.
But a lot of older style terraces, such as what we've got in the back.
Yeah, classic
behind us,
right here, isn't it?
Yeah, right behind us.
Yep.
We're just around the corner from a nice little village shopping strip in Errol Street,
Yep.
Which is quite unique for being so close to the city as well.
So it's a real inner city living,
yeah.
full mix of all uses. Probably a little bit more mixed use than some other inner city locations, such as Richmond or South Yarra, for instance, where you've got your main strip, but it's predominantly resi.
Yep.
Let's talk about the financial. So the market peaked.
Last peak was in 2010.
Yep.
Median house price back then was 780,000.
Yep.
The market's up about 46% to today's 1.126 million.
And it looks like the last couple of years it's levelled off a little bit.
It has a little bit.
Yeah.
It's actually come down from 2016.
Yeah.
The median house price was 114
Yeah.
million, but it is a little bit patchy as well. So we're getting a real mix of high and low sales.
And I think, like, if you look at the median price, it's not, and this doesn't run in sort of smooth lines. It's quite bumpy.
It is.
And that's a reflection, I think, of just the volatility in stock types.
Yeah, and the lower sales volumes as well.
And the lower sales volumes, yeah, absolutely. All right, so in terms of yields, what are yields here?
Pretty good. They're sitting around 2.8% for your standard house, which is above the Melbourne average at the moment, which is just a tad over 2. So pretty good for investors.
And the vacancy rate?
Vacancy rate's very tight, 1.5%.
On a downward trend, I see.
And on a downward trend, which is a real positive, well below a balanced market of around 2.5%.
And I noticed the proportion of renters was quite high in this market. What does that mean for investors?
Look, it's obviously a good thing for investors.
Because it's easier to find tenants?
It's easier to find tenants,
Yep.
hopefully reduce vacancy periods as
Yep.
well. You do have good proximity to a lot of the universities, obviously within the city and CBD fringe or in the Carlton area as well. So it's a positive for investors.
Okay. Could it not be a negative for investors if there's a lot of tenants and there's a lot of rental properties? You know, is anyone going to see it that way, or would you see it that way? Would it scare you off investing in that market?
There is a risk element. Ideally, we want to see a more balance or even a slight swing to owner-occupiers, because ultimately owner-occupiers do drive property growth. But having said that, the growth rates have been strong in North Melbourne.
And I think even notwithstanding that, if you're going to be buying in North Melbourne, you'd preferably be buying a house, and that's predominantly the owner-occupier style anyway. So where are we, mate? Are you tipping your money, your cash into North Melbourne right now, or are you perhaps thinking about other locations?
Look, it's probably mid-cycle. As we said, it's only 46% up over the last 7 years. So I think it's a real gentrifying market that is going to improve over the next 5-7 years. But you need to be very wary of the type of asset you're buying in that area.
So you think there's, it's at 9 o'clock? Or you think it's at 10 o'clock?
I'd say it's between 9 and 10, yeah.
Between 9 and 10, okay. You heard it here first. Thanks, Heath.
Thanks, David.